Good evening and welcome back to Be Rich. My good friend and brother Anand Srinivasan is here with me. And today, as promised yesterday, we will start discussing Ray Dalio's principles, the changing world order, and what are the principles you have to deal with it to survive this period. So, first, before we dive into the book, today we will talk about devaluation, we will talk about Roosevelt, and we will talk about Nixon, and we will talk about asset price inflation. And then we will go forward, and every week once we will discuss that book in great detail. Vinod, how are you?
I'm good, Anand. So why don't you first tell us who this Ray Dalio is and why he is important?
Ray Dalio is the world's largest hedge fund manager. He runs a company called Bridgewater Associates. The results in the last couple of years are not good, but before that have been extraordinary. He manages $150 billion and has been around for more than 50 years.
And what is his investing style?
His investing style is macro investing style, changing along with macro investment. He is more like George Soros, but he is no match on the great Soros. Soros is a class magician by himself. But Ray Dalio, you can figure out what he is doing. And since he's got a lot of money, his returns will not be as big as Soros's.
Okay. So this book which he's come out with, which is called, he's written many books. The latest one is called Changing World Order and Why Nations Fail and Succeed.
Okay.
Rise and Fall. Basically, how come nations
So what he is
rise and fall
coming
of
at,
nations?
we'll discuss this book for at least 3-4 months, one chapter a week. But before we do that, I'll tell you from where he is coming. That is what I'm going to discuss today. For a long time, till the Bretton and Woods system came in the 1940s, and that is only about, say, 75 to 80 years old, the currency of every nation was pegged to gold. If you had gold, you could print more money. If
Yes,
you didn't,
you did discuss that in one video.
Yeah.
How currency came about.
Yeah.
With gold lenders.
Yes, exactly.
Promissory notes.
Yeah. So if you didn't have gold in your wallet, you could not print money. If you printed more money, you better have the gold because anybody could come anytime and put the money and ask for the gold. So they made sure that you had no control over economic policy because if there was a depression, you need the freedom to print more money. But if I don't have gold, how will I print money? The monetary policy of the world became a slave to the availability of gold. So people like Keynes argued you needed to break this link. And so whenever you went off the gold link, like they did in the 1920s after World War I, you printed money. That creates an illusion of prosperity because even without increase in productivity, you have created more money. Using more money, people buy commodities, people buy precious metals, people buy stocks. Automatically the whole thing looks up. What suffers is bonds suffer because there is too much of that and interest rates come down.
Okay, I have one question regarding this. So, is it possible to say that when currency was pegged with gold, that inflation wasn't so bad?
It wasn't, but then you had deflation. Today you don't have deflationary episodes. You have to understand inflation is like high BP. I can take medication to bring down high BP, but deflation is like low blood pressure. You have to just mix salt with lime and water and hope it goes up. I can't do some magic to bring up the BP.
So, that so for everyone else, inflation means a rise of price, and deflation means a collapse of
Price.
collapse of demand. That there's no way you can.
Collapse of price. Money becomes more and more valuable, right? So that's what is happening in Japan for last 40 years.
Okay.
So once the world gets into a deflationary spiral, people are willing to take money and hide it under their mattress.
So Keynes felt by decoupling the money currency with gold, you'll be able to avoid this.
You will avoid the specter of deflation.
Okay.
And we have not had except in Japan. After 1930s, after the Great Depression, we have not had a major depression. We have had deep recessions. But you had so much control over your monetary policy that you could control the economic system.
The amount of money in the market.
Amount of the money in the market. Now, this is where the politicians dump Keynes. Keynes said, when there is weakness in the economy, you print more and spend. And when there is strength in the economy, you tax more and bring down the debt. Our politician took the easy part, print more and spend. Forgot the second part, tax more.
Like how we always listen to our doctors.
Yeah, you listen to your doctor when you are sick.
Correct.
The moment you become okay, you forget to take your medicines.
Correct.
So that's what happened. At the end of World War II, when all this was discussed, what he suggested was a brilliant scheme. He said, he called that currency banker. The whole world will depend on banker, and banker will be the currency fixed in value, and the rest of the currencies will be with banker. Now, Americans had won the war.
So they
Salam,
became
maina paisa dala hai. So why will I listen to you?
correct.
So I have made the new rule.
I'm
Now
back.
the compromise rule is, we won't remove the gold. Gold will be there. All of you dirty boys, no gold.
Yeah, one fun trivia is that before that, when the Indian currency during the British Raj was considered, the Indian rupee was
Was the gold standard for the world.
correct.
It was the strongest
Strange
currency
how things change.
because Keynes was running that currency.
Correct. True.
And it was not backed with gold. That's another day, another time.
Correct.
Okay. Now what the Americans said, we will keep gold. You need not keep gold. And we say, you peg your currency against the dollar. And we will keep the dollar at $36 an ounce. An ounce is 30 grams. So whatever happens to you, I will give you 30 ounce if you produce the dollars.
Correct.
And so countries had fixed their money against dollar. Dollar was fixed against the gold.
True.
This 36 was an arbitrary number decided by Roosevelt. Roosevelt said, to solve the problem of the Great Depression, it was illegal to own gold. All of you have to hand over the gold to me. It's illegal. And declared a bank holiday. And then he said, I would print. And after printing, one fine day when he decided, it is against gold, arbitrarily he said $36 to a gold.
Yes.
And now that standard continued from 45 to all the way to 71. Now, in between, nobody knew how much gold America had. So they kept on printing more money.
Everyone just assumed America is good for the world.
Everybody knew, but nobody wanted to say, hey, he doesn't have money, because you could print, I could print, everybody could print.
It's like calling in poker. No one wants to call.
Nobody wants to calling in. Till one fine day, Nixon realized that he cannot continue with this forever. So he said, from now on I will not exchange it with, there is no exchange.
What was the thing which led to him, precipitated him
That
to do the Nixon
round
shock?
about that same time was the oil embargo
Correct, yes.
and all that.
When OPEC was formed and they decided to.
That was 73.
Yeah.
But even in 71, those problems were there.
Spiraling, yes.
So in 71, he said, you are out of the gold link. Because there was a guy, I think it was 60s, this great French leader of World War II, de Gaulle.
Yeah, they got.
De Gaulle was the first guy in the 60s to say, here are the francs, here are your US dollars, give me the gold. So they wanted to make sure if somebody asked them for the gold by giving money, there is no giving gold. He said, sorry, chief, you want, you take dollar. So the value of the currency collapsed. And what everybody thought, when the value of the currency collapsed, devaluation will hurt the stock market and the commodity markets. What happened is, because there was so much money, people had to pile on into stocks, gold, and inflation took off. And America denied inflation from 1971 till 1977 when it got into, when Nixon lost,
Correct.
right? Until the Jimmy Carter got the rough end of the stick. They denied it, and there was a guy called Arthur Morris, I forgot his name, Federal Reserve guy. He said that there is no inflation. He defined a concept as core inflation. Strip it of all volatile things. Oil is bad. In 71 they cut the link. 73 was the first major oil collapse. All that was a runaway bull market. Till when did the bull market end? The bull market ended when you bought Paul Volcker and he jacked up short-term rates up to 20%.
Correct. Like what's
And
happening in Russia right now?
And gold collapsed from $850 to an ounce to $200 to an ounce. Today when I say gold will correct in this year because US is increasing interest rates, everybody thinks it will happen tomorrow. It won't happen tomorrow. But when interest rates keep on increasing,
Correct.
gold has to correct. So this is the first stage of the book. This is the framework for the book. We will start discussing the book from next week.
Cool. Sounds good. Looking forward to that.
Okay. Thank you for watching Be Rich. I hope you enjoyed this conversation I had with my brother. Once again, please do not forget to subscribe to my channel and turn on the bell notification. If you don't turn on the bell notification, you will not be notified every time we put out a video. Please don't forget to share this content with your friends and relatives. Once again, I thank you for supporting Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.